happy with your local credit union becoming more involved in mortgage lending? Isn't it an appropriate area for credit unions to move into? They're already heading in that direction. I want your views on 0818 300 103, because the League is considering a centralised support unit to help individual credit unions meet their regulatory requirements. Let's find out the thinking behind it. Emmet Oliver is Director of Communications and Marketing at the Irish League of Credit Unions. Mr. Oliver, good morning.
Good morning, Will.
So what regulatory requirements would a centralised unit help meet?
Well, it's more about meeting the demand from credit union borrowers and members. As you know, there is just a massive shortage of supply in the market, and that's one problem that, obviously the government and construction companies and local authorities have to give thought to. But the second piece of it is there enough lending available? And the market is very concentrated at the moment, Will, in the banks and in the hands of the banks, two major providers, AIB and Bank of Ireland in particular. So that's from an economic point of view, and in terms of banking regulation, is not a good situation. So I think credit unions getting involved would broaden the market, would deepen the product pipeline that credit unions themselves can offer, but also give consumers a choice. We obviously have millions of members around the country who, many of them, certainly the younger ones, who have a demand for this product. And we're trying to facilitate those credit unions who want to get involved. This is obviously going to be optional. It's going to be available to interested credit unions if they want to move into this area. They are looking to lend more. The movement is very keen to do that. And this is, in the view of the League over the weekend, the way to go is to help credit unions, facilitate them, because there's a huge regulatory burden generating mortgages and issuing them to borrowers. So as you say yourself, Will, not every credit union currently has the capability, not every credit union at the moment has the interest, but if we can put a service in place, a centralised service to assist them in that, I think it will actually benefit the consumer by giving them the choice, which is very, very narrow in scope at the moment.
Well, let's talk in a moment about how that might work, but for older members perhaps for whom mortgage is no longer relevant and who simply want to get a return on their deposit accounts, rates are quite low, whether in banks or in credit unions. Would mortgage lending amount to more profit for credit unions and thereby a greater financial return for members?
Well, that would be one of the benefits for members, of course. I mean, what they're getting at the moment is low. Investment income is being fairly flatlining for a while. So credit unions generally around the country are looking at ways of finding new income sources. That is correct.
It also exposes them to greater risk, though.
Yes, but it also does have another greater, that you have more variety and diversification in the kind of loans you're giving. And the average credit union loan at the moment is about just over €6,000, and it's over a reasonably small duration. So the reason that's not great is because the administrative burden and cost to issue those loans is quite high compared to the length of time and the size of the loan. But if you go to the US or Canada in particular, Will, and a lot of members of ours would look and see what's going on in those jurisdictions, you'll see that they're sometimes lending out nearly 50% of their loan book for home loans. And I'm not saying we need to go there, but what I'm saying is they have managed to evolve their product suite a bit more than we have in this country. So this has been done before, it has been successful, and has managed to transform other credit unions in other parts of the world. So I think what we need to do is try and encourage and persuade credit unions individually that there is some way to get into this area of the market in a safe and prudent way, but also to reduce the regulatory burden, because as I said, particularly for smaller credit unions, there is a lot of work involved in generating and originating a mortgage loan, a lot more than doing one for, say, a house repair. So, we have to try and look at just developing and deepening the kind of suite of offerings that the credit unions can provide.
Where does it end? For instance, if you loan to domestic buyers, would you also consider loaning to developers who want to build 100 houses?
I mean, I don't see that happening, to be honest. I mean, the relationship between the credit union's members is a very long-standing one and a very close one. And I think it's with the members, not with big property developers and commercial companies. As we know, the likes of Anglo-Irish Bank, Irish Nationwide and others took the lion's share of that business during the crash. So I don't envisage credit unions making that mistake. I think they know and stick with their own knitting, and it's really very much based on a relationship with their own members and their needs rather than sort of big commercial companies. So I don't envisage that being part of this at all, to be honest.
And who determines if an individual credit union will follow a particular path, whether it's into mortgage lending at 20% of their total loan book or 30% or whatever it might be?
Well, it's very much a decision of the board of directors and their managers of the individual credit unions. They are all autonomous bodies. You know, their strategy, the loan sort of parameters, the kind of commercial strategy they employ is very much kind of one for themselves to consider. It's not for any diktat from anyone else. But what we're hearing from our own members of the league is we need to do new things. We need to develop our product suite. We need to expand the kind of range of services that we can offer members, and this also would deepen the sort of kind of loans we give out. I mean, a €6,000 loan, you know, we need to have that larger, and there needs to be a better loan-to-assets ratio. So these are big strategic challenges for the movement generally. So everyone is looking around for new ways to generate business, and, you know, you keep coming back to the average loan could be 200, 250,000. One or two credit unions are already doing some of this, and they're offering loans of up to 300,000. So, you know, you can see the difference between that and a smaller personal loan of about €6,000. So it will give you the certainty of a longer time period, and it will also give you more diversity and also reduce the cost-income ratio for each loan and the administrative burden. So it kind of is, you know, there's a lot of win-win elements to this, but it has to be done prudently, and it has to be based on individual credit unions being comfortable with it and opting in rather than something that's done by compulsion. I think it has to be part of their own strategy and something they're comfortable with. But I think,
and if they do opt in, and given that there may be this centralised support unit set up by the league, would there be criteria they would have to meet, and might some of their autonomy be eroded in doing so?
Not really. I mean, this is something
not
that
really.
would benefit. Well, not at all, actually. What I mean by that is this is something that they would want to do. And also, when you talk about how the loans will be governed, the central bank is going to play a huge part in this. They have a whole suite of laws and codes governing mortgage loans, one of them which deals with how arrears would be handled, others deal with the kind of interest rates that are applied, others deal with the maturities and can you back up the loan with deposits on the other side in terms of your balance sheet structure. So it's not as if the credit unions will just do this and there's no sort of layer of regulation over the precise loans that are issued. Obviously, the central bank itself, which pays very close attention to the sector, will be core to the whole thing. And what we're trying to come up with is a system that's standardized. So rather than having very different types of loans all over the country, the product will be reasonably standardized. And that's something the central bank have indicated they're in favor of. That would obviously make it easy for them to regulate these loans if they're standardized. The branding as well, would probably be very similar. So you go into your individual credit union, the name of the loan and the main elements of the product are going to be pretty similar as well. So again, that's going to help to just reduce the kind of variety and different types of practices that might go on between individual credit unions. But you are right, ultimately a credit union at local level will decide whether it wants to go down this road or not, and that's the way it should be. That's what makes, I suppose, credit unions different from the banking network, where head office sort of says you're going to sell the following products. The essence of a credit union is that it's done and decided at a local level.
Well, if the movement as a whole, or at least if a sufficient number of credit unions decide, yes, we want to embrace this, what timetable would you imagine it rolling out on, whether it's this centralised unit or individual products branded across the country becoming available?
Yes, well, some of the larger credit unions are doing some mortgages. It's reasonably limited, but there are some of this going on. In terms of the system that we're looking at setting up, the streamlined centre, we're looking at very much later this year, having it available, possibly going into the early part of next year is looking like the most likely time when it might be introduced. It's going to take a while. We want to do it in consultation, obviously, with members. It's also, you know, the mortgage market is very fluid at the moment. The housing market is very fluid. So the level of demand is likely to go up. All forecasts from most economic authorities would suggest that the level of drawdowns on mortgages is going to rise very spectacularly in the next few years, and the level of building. We're building about, I think it's about 10,000 to 15,000 new builds a year. That's going to go to 25,000 by 2020, according to most economists. So there is a lot of demand there already, Will, but it's going to grow. So we want to get this into the market sooner rather than later, but it has to be done correctly and calibrated in the right fashion. So I would say at an estimate probably early part of next year is when you'll first see it being made available.
Emmet Oliver, thank you very much for taking our call.
Thank you.
Mr. Oliver is Director of Communications and Marketing with the Irish League of Credit Unions. Are you comfortable with your local credit union becoming a mortgage lender? Would it cost you a thought? Maybe not one wink of sleep. 0818 300 103 is the Midlands 103 comment line.